So, welcome to Mitchell Consulting's Financial Empowerment Roundtable. We do this roundtable monthly, the second Wednesday of the month at 1 p.m. Eastern. So, you're more than welcome to join at any time. This month, we are talking about owner's pay, and I would love to have some discussion with you. This is a pretty casual type of roundtable where we're open to questions, we're open to discussions. Um, I'm just going to cover a few tips here in the beginning, and then we're going to open it up for everyone to have a discussion. We did have a few questions come in this time that we want to answer. But this is a roundtable, so I would like for you guys to chime in and participate. I also would like for you to introduce yourself because community is important to us. So when we get to that point, I would like you to come off of mute and just say who you are, what you do, and maybe a tip about your business or what you're like if you're looking to collaborate or anything like that, maybe share something like that. But let's go ahead and get started because I do like to respect your time. So welcome to the Financial Empowerment Roundtable. And this month we're talking, as I said before, we're talking about owner's pay and unpacking all that happens with owner's pay. Hi, my name is Michelle Mitchell. I am the CEO and founder here of Mitchell Consulting, and we have been in business for 14 years. We started out as bookkeeping by myself, solopreneur, for about 8 or 9 years. I did this all by myself, so I know what it's like to be a solopreneur. I know what it's like to hire my first contractor who is on this call today, and I will introduce him in a few minutes. And I know what it's like to build a team. So I have a breadth of experience, not only in the financial world, but also as a business owner and building a business that really runs itself without me having to do every little thing. So, and I appreciate my team for that. So I'm going to introduce my team right now. So our accounting team, we have Evan, who has been with us. She was that first contractor I hired that I talked about, and he's still with us today, and I'm so excited. Evan has been here since 2017. And then we have Lauren, who's on vacation today. And she is our business advisor. So if you have a call with us, you'll probably be talking with Lauren first, and then we'll decide where you need to go from there. And then we have Eric, who has been with us almost 2 years now. So it's coming up on 2 years. And he is our bookkeeper, and he likes to be in the background, but he's here today. So we have
I always
Eric
show up to
and
support.
I know we have Eric and Evan here with us today. And Lauren is on vacation. So I don't know if Evan and Eric, you wanted to say something. You can if you like.
Yeah, just pleased to meet everyone. Thanks for being here.
Yeah.
Yeah, it's always nice to see new faces and returning faces at these little events.
Yes.
I like it.
Awesome. So Roundtable, we've been doing Roundtable now for over a year, well over a year. But now we have just introduced a community because what we find is people can't always attend Roundtable like live. So we've started this community called Empower, Thrive, and Scale. It's on Facebook. So you can scan the QR code, you can join the Facebook group, and we can continue our discussions in the Facebook group after Roundtable is over, and we'll continue to add our tips and things like that. You can ask your questions. It is a community. We want to build community because being a business owner is lonely. I can vouch for that. Being a business owner is lonely. So go ahead and join the Empower, Thrive, and Scale Facebook group, and we can continue the conversation from there. So now if you like, I would like for each of you to introduce yourself, tell us about your business, and maybe one tip or thought or idea you would like to share.
I guess I'll go first alphabetically here. My name is Aaron. I partner in Daylight Brand. My business partner's on with me, Dale. Apologize for my voice. I'm still recovering from 3 weeks ago. Anyway, so we we're just both designers. We design apparel and print our own shirts and stuff they're all centered around outdoor activities, mostly supporting like communities. So hiking communities, biking, kayaking. Those are the big three that we're focused on right now. And there's some exceptions in there too. Um, but any place that we can jump in and support these communities or small businesses that support communities as well. That's kind of a focus. So
Okay. Welcome, Aaron, from Daylight. And then we have on my screen, I see Kiwan. Kiwan, is that it? Would you like to introduce yourself?
Kiwan
Kiwan, okay.
Amy.
Welcome.
Hello, how are you?
Good. How are you?
I'm doing pretty good. So I am a disabled veteran. Back in 2017, lost my eyesight due to a motorcycle accident, and where a guy pulled out in front of me. And yeah, that's pretty much all she wrote. And so I ended up I'm in North Carolina, so I ended up in UNC hospital for 2 months. The first month, didn't even know I was still here. And the second month was, of course, spent with physical therapy because I was pretty much beat up from head to toe.
Wow.
Yeah, so have you ever heard that saying, the car wins every time? It's true.
Yeah.
So anywho, I actually had a business before I had my motorcycle accident, and I was actually doing stuff that day of the accident for the business. And it used to be called it still is called Kiwi Enterprise. And I did website design and management. I did social media marketing and photography. And so on that day of the accident, which was May 5th, 2017, I'll never forget it. I was I was going to update the website of one of the, I guess you say, clients that I had, because they had some outdated photos on their website. And so that's what I did. I went over there, took the photos, I got a little ride in, and that's how that day ended up happening, was I had my motorcycle. So fast forward to, let's see, last year, 2023. Well, I guess you said 2023, but 2019 was the first time I ever did it. I am now a motivational speaker / paid speaker.
Okay.
So that's where I am in that space now, and it's called Amy Motivation. So I do that now, but the reason I said 2 different dates is because the first date of 2019, I did my first motivational speaking engagement, but I had not established a business yet. And then 2023 was when I filed out my paperwork and all that good stuff to say, "Hey guys, I'm here."
Well, congratulations.
Created my website and everything. And now I am also, I guess you say, investing / soon to be owning multi-family real estate.
Okay.
Which is another way of saying I invest in apartments and soon to be owning them.
Gotcha.
So yeah, that's me.
Well,
Thank you.
welcome. You're welcome. Let's see who else do I have on my Dale. Would you like to introduce yourself?
Yeah, hi, I'm Dale Rudd, the other owner of Daylight Brand. Aaron covered a lot of it. We also have a podcast, and we're just working on expanding things, but we're in the middle of some client projects for small businesses and organizations. And we're also really excited to be partnering with From the Ground Up, which is a passion project run by two cyclists, pro cyclists. And they're going into their 4th season of this TV show. And we are partnering with them to make some cool t-shirts for them because they love that we're community focused, just like they are. So
Nice.
yeah.
Well, welcome.
Thanks.
Okay, so thank you guys for introducing. Did I miss anybody?
I
Because
think we have one other person.
You got Ashley Nance there hanging out.
Ashley, would you like to introduce yourself?
Sure. I'm Ashley Nance with Revoice Marketing, and I met Michelle at a 1 Million Cups event in Kalamazoo last week, and I design online courses and do digital marketing. So I'm excited to be here.
Yes, welcome, Ashley. I'm glad
Thank you.
you're here. Okay, so we're going to get into a little bit of the content, and then we're going to open it up for discussion as a roundtable should be, right? So today's topic, I love Lauren puts these slides together, and this one she has surviving to thriving, right? Pay yourself consistently. So I know this is a hot topic for most business owners. 1, we don't know what to pay ourselves. 2, we don't know how to pay ourselves. And 3, we always think we need to reinvest the money back into the business, so we shouldn't take a paycheck. And I beg to differ. I beg to differ. One of the things I always like to say is you got to take care of you first, and then the business can take care of itself, right? So if you're taking care of you first, that means you need to be paying yourself on a regular basis. So some of the reasons why a lot of business owners either don't pay themselves or they pay themselves too much. So it's one extreme or the other. So one is I want to reinvest everything I'm making back into the business. And I'm like, okay, so how are you buying groceries? How are you paying for where you're living? You know, you may have support at home, but everything shouldn't go funneling back into the business. And here's one of the reasons why. When you get ready to hire staff because you're growing your business, how much are you going to pay them? And if you're not paying yourself for that work that you were doing, like, where's your budget coming from to pay that person? Because your business is not used to paying anyone, right? So that's one reason. The other reason is the extreme reason is that we pull too much of our equity out of the business and we have nothing to operate on. So that means, which is coming up here very shortly, tax day. When small business owners get their tax bill, they're shocked and they're like, I don't have that money. But you should. If you're doing things the proper way, your business should have enough funds to set aside for taxes, to pay the owner, to pay operational expenses, and to have some set aside for profit. And if you're not doing that, you're not making enough money. So let's work on increasing the top line so that we can then distribute the funds in the proper way in which it should go, which means paying yourself, paying all your operational expenses, paying your setting aside funds for taxes, and then having some left over to reinvest back into your business. And if you're not doing that, we need to work on the equation because it's just a math equation, to be honest with you. And if you need help with your math equation, we can help you with that. So this is why there's always this struggle with small business owners and paying yourself, not paying yourself, overpaying yourself. And, you know, you need some consistency so that you can plan your own personal life for the work that you've been doing in your business. So unpacking the puzzle about why it's important, and why it's tough to pay yourself. And it's because that equation is out of balance. You don't have enough revenue so that you can pay yourself. That percentage you're keeping in the business may be too high. So then we need to work on some other things to balance this, right? And then we need to stretch like our dollars. We know that. Like in our personal life and our business life, we stretch every dollar we can to make ends meet. But one of the most powerful thing about being an entrepreneur is that you can turn on the faucet for revenue anytime you want to. Like, you have that ability. It's not like you're receiving a W-2 paycheck and that's the only amount of money you'll receive. So you got to put forth a little more effort to turn that faucet on. But that's one of the cool things about being a business owner is that we have a faucet and we can turn it on to generate more revenue. Evan, did you have anything you want to say about this part?
Yeah, I just wanted to, I guess, highlight the third point of growth first gain. It's worth sort of thinking about what does growth of this business look like for you? You know, some folks are dead set on starting as a solopreneur, quickly growing their team, and then, you know, converting to like an S corporation or something like that. That's not for everyone. Some people start businesses so that they can fit into the more complex puzzle that is their life. So it's important to sort of have a growth plan. I would say like formally set aside, but at least have some sort of idea of, you know, what the long game is for starting and running a business. If you don't have a clear target, even if you're keeping track of your numbers, you don't really know what you're aiming for. So getting yourself on a consistent pay schedule or certain metrics you want to hit, if there's no like hard reason behind those, they're sort of hard to calculate and then also hard to hit, which can lead to confusion, which can lead to burnout, et cetera, with, you know, being a solopreneur.
Yes, that is so true. Yeah, you got to have a plan for where you want to go. So that's vision. Like, where do you want to go? Do you want to stay a solopreneur? Do you want to grow this thing into a team and, you know, move yourself out and into the CEO role, or you stay small? Like, all of those, any of those answers are good answers as long as it's for you, right? They're good answers for you. So that's the one thing you got to do is decide which way you want to go. And guess what? It can change over time. Because for me, I didn't want to grow in the beginning because I had children at home. I was the laptop mom. I could take my laptop on, you know, school trips, events, and I could be in a corner like working on somebody's books, but I'm with my child at their event. You know, so I did that many times, and then I came to the point where I wanted to grow a team. So you just because you answer it one way right now doesn't mean that's the answer forever. It can evolve over time. So just as long as you have a plan, you know, it's your plan and you can work that plan. The other thing is just planning for success. Planning how you're like how you're going to reach that overall vision for what you want to do in your life and how this business is going to fit into that so that you have that balance in life that you're looking for. And that means paying yourself so you can do more fun things in your life, right? But when you have a plan, it's just easier to follow the plan instead of just being haphazard about it and not really having a direction on where you want to go. So Evan is going to talk about the roadmap to keeping your numbers, to financial freedom and keeping your numbers on track.
I also do want to add that something that I appreciate that we keep in mind here at Mitchell Consulting is, you know, like people start businesses as like I was saying earlier, as like a part of the bigger picture that is, you know, their life, their family, their friends, et cetera. There's a lot of like beauty and pride that come with the autonomy of starting and running a business. But, make sure you remember that like you started it because you enjoy doing that and you wanted to have it form into your life. Very quickly, if you don't have a grasp on things, it can flip. And suddenly you're bending things in your personal life to sort of match this business. And then you find yourself in this weird conundrum of like, I was really dying to do this and it felt good for a while, but now suddenly I'm feeling, it feels, it is work, but it feels like work in the bad way. Where suddenly your business should be like your life should be dictating the business decisions that you're making. It should support the sort of life that you want to live, not the inverse. So I just want people to keep that in mind, because I think that conceptually is important and is like especially important when it comes to working with like solopreneurs, small business owners.
Yeah, I was on a call was it earlier this? Yes, I think it was earlier this week. I was on a call with someone earlier this week, actually from the Women's Business Council, and she was asking me how many hours do I work in my business every week. And I'm like, maybe sometimes 40. And she was like, wow. She was really surprised because most of the time owners of businesses work 60 to 80 hours a week, and they're definitely not compensated for working 80 hours a week because they're not paying themselves enough. But also that comes with learning how to delegate within the business so you're not working 80 hours a week. And then especially if you're not paying yourself, then you feel like this business is a drag and your family doesn't even see the benefit of you spending all that time doing it, right? So we need to balance that and have it be win-win for your business and your personal life. And this is one of the reasons why I'm so passionate about helping business owners really find that balance between not only how much you work, but how you're compensated for that, because you took risks to start this business. And just by taking that risk to start the business and run the business, you should be compensated for that.
Mm-hmm.
That is my wholehearted opinion. And so we just help our clients navigate that process. Because we've seen clients that are working 60, 70 hours a week, and they get to the point they get burnt out so fast. And then we have to do this realignment back to relatively normal pace, and so that they can pay themselves. So
Mm-hmm.
I really appreciate how we do that with clients.
Mm-hmm. And it's worth noting too that that there is going to be sort of this initial like hump to get over when you're starting your business.
Mm-hmm.
Like you are going to have to be like putting in a lot of time and effort and thinking about it a lot. But it's important to know that like that doesn't have to be the standard the entire time. It's also very easy to feel like there's a certain nobility with doing everything yourself and putting in a bunch of time. But as Michelle just laid out, that's a very quick recipe for burnout.
Mm-hmm.
So again, the autonomy is really beautiful and there's a lot of work that's required, but make sure that you're still taking care of yourself, as we were saying. As far as this roadmap goes, the first step, which sounds like a no-brainer, but you'd be surprised at how often it's not taken care of, is just having accurate data of your business. Chances are when you start off, it's, in my experience, what I've seen is someone has a service or an idea that they're really excited about and they want to turn into their business. They start with something that they're really good and passionate about. Often that's not bookkeeping or finance. You'd be surprised at the amount of folks that have been running a business for a couple of years, and even if you just ask them like, okay, what was your net revenue last year, or like how is this month going for you financially? Oftentimes folks don't even really know that information. So you can only make you can only make decisions based on the data you have. So if you have unreliable data or no data at all, then the conversation about paying yourself and having cash flow free are kind of moot at that point. You know, you're shooting at a moving target and sort of hoping for the best. And I sort of see these last 2 points as going hand in hand. Just having an idea of financial literacy is so important if you're going to be running a business. Either familiarizing yourself with some of the basic concepts, or just, you know, having the humility to like ask for help and have someone sort of lay it out for you. A good example is like, so the second bullet point is prioritizing profit versus cash flow. You know, a lot of folks aren't really even aware of those two things conceptually. Like, I've seen businesses that at the end of the year do end up turning a profit, but if you get into the nitty gritty, the amount that money is coming in and leaving the business, you know, they might not have any more than $1,000 sitting in their account at any one time, but they're still turning a profit consistently. It's very easy to sort of look back retroactively and be like, well, we may have netted a couple like thousands of dollars in revenue, or sorry, in profit for the year, but what was the timing of that? Is enough of it available so that you are able to pay yourself, so that you're able to pay your team, so you're able to cover your operating expenses as they come up. So just being aware of, those sort of basic financial literacy points, just so that, again, you can make an informed decision. And, you know, it's okay to ask for help. Like, I feel like I keep harping on that. It's easy to lean into the sort of grind set of doing everything yourself. But again, I think that things operate more efficiently if you have, you know, a group of folks that are specialized in individual tasks, and they all come together and they're being the most efficient at their like respective tasks and working together. So yeah, the foundation of it all is making sure that you are aware of the financial like efficacy of your business. If you're not there now, then working with someone to get to a point where you are. We like to recommend folks, if they're working as a solopreneur, taking like a day a week to be sort of their like back end finance day. I know that can even be hard to block out in your schedule if you're doing a lot, but I can't recommend that enough. If you aren't aware of the total inflows and outflows over the course of the month, then even if you have a profit, you might not even know what services you can afford, what kind of help you can afford. And if you're feeling dragged down in those other categories, then realistically what's going to happen is the cornerstone of your business, whatever you're comfortable selling or promoting or doing, you're going to start lacking in that department if you're running yourself too thin and you're sort of working on unreliable data. So ensuring that you know exactly what's going on, ensuring that you can sort of distinguish between these like sort of basic financial terms, and then also knowing like when to ask for help and when to figure out when it's time to bring someone in to do the things that you maybe don't want to do, so that you can free up your time to be doing what you're best at, which is probably pushing your service or your product and like interfacing with your clients and interfacing with the business community.
100% agree. So everything Evan said was right on point. One of the things, I want to give you some practical data. So as a business owner, especially those who don't pay themselves, like, I want you to figure out in your personal life what you need, what your financial need is. And then I want to help you back into the number that your business needs to generate so you can pay yourself. So I've come up with this scenario of, let's just say in your personal life, to meet your essential needs, your fun needs, and your future self needs. So essential needs are your mortgage, your rent, your utilities, your transportation, and your groceries. Those are essential. You have to meet those needs in order to survive. Fun needs would be like, going out to eat, or your Netflix subscription, or going to the movies, or taking a vacation. Those are your fun needs. And then your future self needs are getting out of debt, investing in your future, setting aside your savings. Like, when you're a business owner, all of those things need to be met. And let's just say that in your life costs $3,500, right? So how much does my business need to produce so I can take out $3,500 a month? My rule of thumb is take that $3,500 or whatever that amount is and divide it by either in a range between 0.3 and 0.5. So if you divide that number, 3,500, by 0.5, your business needs to be generating $7,000 a month. That way you can pay yourself 50% of that, which is 3,500, which will meet your personal financial needs. The other 3,500 stays in the business and it's for operations, profit, and tax. Let's just say your percentages are a little bit different and you can take 30% of your total revenue. So your total revenue, if you're dividing that 3,500 by 30%, you will need to generate $11,667 a month. But then you're paying yourself, you're meeting your operational needs, your profit, and your tax savings needs as well. So that's a rule of thumb. If you guys just take that number, whatever that need is in your personal life, divide it by 0.3 to 0.5, that's what your business revenue should be generating so you can meet that personal financial need. So that's just a quick math tip for you to, just do a gut check of your business. So like, okay, I can afford this. Now we need to keep our operational expenses within a range so that we don't overspend, right? And then that way it's easier to pay yourself. So that's just a math tip I wanted to share with you guys about that. But
Can I add on to that really
Sure,
fast before
absolutely.
you? I feel like it's a good time to bring up profit first,
Yes.
which is something that we recommend to all of our clients. People also call it small plate accounting. What that looks like is having distinct bank accounts for all the different like avenues of your business. So having an operating expenses account, having a profit account, an owner draw account, and a tax account as well. So whenever you're bringing in money, whether it's like biweekly or even on a monthly basis, you're doing that calculation that Michelle was just detailing, and you're like physically moving the money between all of those separate accounts. Because it's very easy to, let's say you net 10 grand in a month, you feel good. You're like, all right, I have $10,000 in the bank account. Things are looking really good for me. I can maybe purchase this thing I've been like holding off for a little bit. With profit first, you're taking out all those percentages, what you're going to owe in taxes, your desired profit, and you're putting those away so that it's sort of out of sight, out of mind. Because even though you have $10,000 in your operating account, 30% of that is like might be going to taxes. 10% of that you might be putting aside to pay yourself at the end of the quarter or something like that. So it kind of helps give you a quick snapshot instead of having to do all those calculations. In theory, it's much easier to, pull up your file or pull up your bank's website and say like, okay, while I have 20 grand right now, 10,000 of that is earmarked for like expenses I know I'm going to incur or taxes I know I'm going to incur. So that way you have a better idea of like what your cash flow is actually looking like, and then just giving you a more informed opinion on how frequently you can pay yourself and how much money you sort of have, how much wiggle room you sort of have with your leftover cash.
Excellent. Yes, we highly recommend profit first. So I want to tell you about two stories here. We have two clients. One's a travel concierge consultant, and the other owns a high-end salon. And I started, both of these business owners came to me at the beginning of their businesses. One was in, she didn't have enough cash flow to keep her business afloat. So she came to me and I worked with her to help create a financial system that will help keep her business afloat. Now she's been with me now over 10 years. And she's retired her husband. Her husband no longer works a job. He works in the business. They can travel whenever they want to. Like, it's amazing how her life has changed. And then we have our travel consultant. When COVID started, her business shut down, like zero. All of her trips that like we were going right into spring break, all of the money that she was anticipating like stopped. And it wasn't for any cause of her own. You know, we were in a pandemic, no one was traveling. So I worked with her like consistently to help keep her business afloat because we didn't know when or how we were coming out of a, a century pandemic, right? But her business is afloat today and she is thriving because she had someone that she could talk to and we just pivoted what she was doing. Yep, she couldn't book any trips anymore. So we switched things up where she started working with other travel consultants. We not only did that, we helped her find resources that she could tap into that will help keep her business afloat. Like she got grants, she got like the government COVID dollars. Like she got all of those, but it kept her business afloat. And I told her consistently, if you work on your business now, as soon as COVID is over, as soon as the travel restrictions are lifted, your business is going to boom, but you got to prepare now for what's going to happen in the future. And that's what it looks like to have an advisor on your side, because she was so close to what was going on in her business and she couldn't do anything. She literally felt hopeless. And she actually applied for a cashier's job at Walmart. And I told her, no, you don't need to do that. You have resources. We can keep your business afloat. And she is still here today and her business is thriving. So I just wanted to share that story with you about that because that's what it means to have someone on your side that has your back and is looking for ways for you to improve your business, even when you can't see a way out. So now I would like to open it up for questions. I know some people submitted questions. I think Evan or Eric, you have those questions and we can go over those, but I would like to open it up now for discussion. Anybody have questions about what we just talked about, or you have another question you would like to ask? We're happy to answer.
Can you explain what you were talking about with what we would need for our expenses, our personal expenses, and paying and dividing by? Can you
The
just explain
percentage.
that again? Yeah.
Yeah,
I heard it and I tried to figure it out in my head and it didn't make sense. I'm not good at math, so
I understand. So you need to figure out what your own personal expenses you need for your own household first. One of the ways I like to teach people to do is go back to your bank account for the last 3 months. Where did you spend money? Like, and put them in categories, put them in buckets. It's rent, it's those essential things, then it's those fun things, and then it's for your future self. What buckets did your money go in? So at least you have data before you know how much money you need. But once you figure out how much you need in order to run your life, divide that number by the percentage, 30 to 50%. So whatever that number is, and that's what the minimum number you need to generate in your business for business revenue so that you can pay yourself that amount. Is that understandable, Aaron? And I know some businesses have a little bit different business model. Most of the businesses we work with some of them have products, but they're service providers, and that 30 to 50% works for those models.
yeah, I think that makes sense. my situation's a little bit different in that I'm fortunate I married somebody who makes way more money than I do.
Yeah.
But
I have one of
but
those too. So.
right, it's nice. I can focus on the business and not worry about getting
Exactly.
paid, but I want to get paid, you know?
Right.
But
And you don't have to, like, if you don't need the money, you can set it aside in an account designated for owner's pay. So whenever you're ready to pay yourself, you can.
yeah, that's a good idea.
Yeah.
Yeah, okay. It's just that you said 30 to 50% though. That's what we should account for.
Yeah, it's about 30 to 50%. It depends on your business model. So we would take a look at your business model and what you have going on in your business, and then you get to decide what that is. And then we make all the other numbers fall in line except for the tax. The tax number is about 15% of your gross revenue. And we do it based on gross revenue because we know we're overestimating if we calculate it on gross revenue. Because by the time you have all your business expenses, it's going to be less that you actually have to pay. And guess what? If you're setting aside 15% all year long, you actually are building in a bonus for yourself because your tax liability won't be that high. It won't be the 15%.
Okay, thank you.
And our clients that do this, like they just have more cash in their business. They just have more cash, and on a quarterly basis, they're able to pay themselves bonuses. And that's one of the things I love about the Profit First model is that it's a built-in like savings. You just have to build up the discipline to keep it going. But it definitely works. Eric or Evan, did you guys have one of the questions that was submitted that we can answer?
Oh, I was about to say something.
Oh, go ahead.
Hey, so I'm loving this conversation about numbers. I'm a math guy, sorry.
Oh, good.
So
Hope you're not all confused, non-numbers people.
yeah, I know, right? I was like, oh, I'm so sorry that he does not understand this. But I love math. I grew up that way as a kid. And I even helped teach my younger brother who is, so I'm 32, he's 20. So when he was coming up in high school, he was like, I don't understand this stuff. I was like, well, you have to explain it to me because I can't see the book.
Right.
And I still understood everything he was saying. But anyway, I digress. So the expenses, all that stuff, and paying yourself, that makes so much more sense with the calculation and the equation that you gave.
Mhm.
And I was already kind of like thinking, well, maybe, you know, what I need for my personal life, I should just double it in my business expenses
Mhm.
or business, you know, profits. And sure enough, that 0.5 did it. And I was like, see, I was
Yeah.
on point.
Right.
You know, I was like, I'm already there. But
Math be mathing.
listen, it wins every time.
Yeah.
So that right there was a golden nugget, as well
Awesome.
as you just mentioning that tax statement,
Mhm.
because I've been trying to figure that part out. I've heard so many different things, but see, people just talk about, oh, well, just, you know, whatever you make, put half of it in a tax account. I'm like, what?
Right.
They're gonna take all of it?
Right.
Are you gonna take a 50% of my check? Come on now.
Right.
I don't think that's right. So, you know, I've heard so many different things, and I'm glad you brought up the 15%. Definitely easily can be done as far as math wise
Mhm.
of what I need to put aside. Because I, being a paid speaker, when I do, of course, get paid,
Mhm.
my check is pretty simple.
Mhm.
So I uh, I usually speak for no less, well, this year anyway, no less than 10,000. So
Mhm.
that's pretty easy, like a easy cut check,
Mhm.
and the numbers flow off very simply. So 15%, of course, would be $1,500. You know,
Right.
it's pretty easy to set aside. but of course I have to pay my assistant as well.
Yep. And
And
that's in
I
your
just pay him
operational.
monthly.
Yeah, that's in your
Yeah,
operational expenses, you know.
right.
Um, so you really need to look at what it costs to operate your business and figure out what that
Hmm.
percentage is. And
Hmm.
that's the percentage you set aside for your operational expenses. So as
Yeah,
long as it's in alignment with the equation, then you'll have enough money for it, right? Yeah,
right, exactly.
yeah.
And of course that, it's my assistant is my mother, so
Mm,
that kind of helps out too.
mhm. Yeah.
Because she's like she knows and she understands when mom, I have not been anywhere, so don't act like I have all this amazing money.
Right.
Um,
Yeah.
but that's one thing. So yeah, I was just thinking about it.
Okay, good. The other concept I would like to introduce here also is like your entity, how your business is set up legally, because
Hmm.
you have different benefits whether you are an LLC versus an S corp versus a C corp, you know, a partnership brings in a whole like daylight,
Mm.
like it brings in a whole nother element of things in a
Yeah.
partnership. So there are advantages to being an LLC versus being an S corp. An S
Hmm.
corp will save you on taxes. So, you know, if you need if you need to discuss that scenario, then just give us a shout. But as a rule of thumb, once your business is generating at least $150,000 a year, you need to consider S corp because
Yeah.
it can save you $6,000 to $8,000 a year in taxes.
Hmm.
Like that's real money. So
Oh
what
yeah.
would you be able to do if you had, let's just say you invested half of that for your future, right? What if you
Hmm.
invested half of that? Like over a lifetime, like over the next 20 years, 25 years, you could have $1 million just by making that switch in your business from an LLC to an S corp. So you definitely should consider that and talk to your CPA about it. I mean, you can talk to us about it as well, but we're more in the operational part of your business, and your CPA knows what's happening in your personal life, so they can
You're right.
give you a little bit better guidance. Because sometimes we don't always see that part of your life. But yeah, that's something you can also consider is your entity type.
Right. Right.
Yeah.
Exactly. Yeah.
Yeah,
I
I think.
currently. Oh, I'm sorry. Go ahead.
Oh, I was just gonna say quickly, like stemming from that is the entity type that you have also can like dictate the ways that you're paying yourself. A lot of people are
Absolutely.
surprised to see that they can't just be taking, they can't just take a withdrawal from their business account. And that doesn't operate the same as having yourself on payroll and having taxes being deducted at the appropriate
Yes.
schedule.
Yes.
So that's, I guess, the takeaway from that is like, be like calculated with that decision. And it's much easier to do that, front load the work of make sure you're doing everything at the
Mhm.
right time and in the correct way rather than doing it for a year and then being hit with like a 15% tax liability because you're actually owing self-employment taxes when you don't think that those are, likely to be owed.
Exactly. Yeah.
Would you happen to know what entity dictates that more so than the other?
Yeah, so single person LLCs, you're going to be the net income of the business is going to sit on your personal tax return. So if you're paying yourself that way, that's just going to come as like draws you're taking to yourself. And then the taxes owed by the business are sort of lumped in with any other wages or any other financial situations you have. Whereas if you shift yourself to an S corp, you're going to be at the corporate rate, and also then it's mandated that you'll be like paying yourself as a formal employee. You'll set yourself up on payroll and have those consistent deductions coming out bi-weekly or monthly whenever you're paying yourself.
Oh,
And
okay, gotcha.
also worth saying too is like even as an LLC, you can still put yourself on payroll and do all of those things. Um, I just often see folks not fully understanding when to sort of make that switch,
Hmm.
and potentially realizing it like too late. expenses. And it's also
Yeah.
worth noting that when you're putting yourself on payroll and doing that process, those are deductible business expenses for your business.
Yes.
So if you're just taking a draw, there's no distinction between the business money and your money. That's just the lump sum of that, whatever the profit is going to be taxed at self-employment rate. Whereas if you put yourself on payroll, if you've paid yourself 10 grand for the year, you can reduce the business's taxable liability by that 10,000. And then also you'll receive a W-2, the appropriate taxes will be taken out and you won't get hit with an unexpected large tax liability at the end of the year.
That is true.
So
One of the other advantages of that as well, so think about your personal life and let's just say you wanted to buy a house. One of the disadvantages of being a single member LLC or a multi-member LLC is that you need 2 years of tax returns in order to even qualify to apply for a mortgage, right?
Mhm.
But if you are a S corp, you receive a W-2 from your business, and they will accept a W-2 much faster than they will scrutinize your profit and loss statement if that's what you're using to qualify for a mortgage in your personal life. But if you had a W-2 from your business, they're gonna take that. It's just like being an employee. But then that W-2 income that you receive is a deduction in the business, whereas paying yourself through distributions is not a deduction of your business. So it gets a little complicated, but there are advantages and disadvantages one way or the other. So just wanted to make you aware of that.
a question.
Sure.
So do you have to be an S corp to make the switch to paying yourself payroll like that, or you're saying yes?
It is required when you make the switch. Yeah.
So when you make that switch, it is required to
Yes.
be an S corp. Okay.
Yes.
Because you're taxed differently.
You're taxed differently.
And maybe I misunderstood what you're asking, but like you don't have to be, so you can still be an LLC and have payroll going and put yourself on payroll.
Oh, that's actually what I was getting at. Okay. So
Correct, Michelle?
Yeah, you said that right, Evan.
No.
No.
LLC only gets distributions. S corp gets distributions and W-2. It's both.
I see.
Yeah.
My apologies.
So how do you switch? How do you make that switch?
You have to file the form with the IRS, and let me see if I can Google
Ooh, I
it
just
real quick.
cringed when I heard that.
I know, right? It's form 88 something, or I don't know. Eric, can you look that up real quick?
Is there a reason why we wouldn't want to be an S corp?
Yeah.
Well,
what are the negatives here?
the negatives you'll have to have a payroll system for one.
What if you already have one?
Then you just add yourself as an employee and set your salary. The other thing is, especially Aaron, you will have to have a board meeting because you're a partnership. You'll have to have a board meeting and just document the board meeting. You know what happens when you're a single member LLC. It's really weird, but you have a board meeting with yourself and you just document it. So those are the two requirements for an LLC, a S corp from the IRS, that you have to have a board meeting and you have to put yourself on payroll with a reasonable salary. But you can still take distributions from your business. Whole nother thing, but you need a K-1 and all that. But that's a tax thing.
You guys help with the process of transitioning over from an LLC?
Yeah, we can. Eric, did you find the form number?
Yes, you're referring to going from an LLC to an S corp?
Yes.
Is it,
It's 88 something.
I couldn't find an 88 one. I got the 2553.
Oh, maybe it's 2553. No, it's 2553. So
Okay.
it's just a form you file with the IRS, and you have to have your form accepted by the IRS by March 15th of the next year. So if you want to do it for 2024, you have to submit the form and the IRS has to accept it before March 15th of 2025. So if you're cutting it close in December and you might not get your letter that qualifies you for 2024. So just be aware of that.
You have to apply every year.
No, just one time to make the election.
Can you not be approved, I guess? Is that a thing?
I guess you could not be approved. Interesting question.
Would that that 150K you mentioned, would that be like what, a disapproval thing?
No. It's just,
Oh, okay.
once
Because
you
I know
reach
you mentioned it. I'm sorry.
yes, once you reach about 150,000 in revenue, that's when it makes sense. So the tax savings offset the expenses you might have. So one, you have to file an additional tax return for your corporation, which is going to cost you more with your CPA. You will need a payroll system to run your payrolls with. And at that point, I would say you will need some type of ongoing accounting support just so you make sure things are being done properly. So, that tax savings I talked about $8,000, some of that is going to be taken up by the additional expenses, but the overall savings is more than worth it, paying those expenses. So that's just the threshold. I guess if you make more than 50,000 net profit, you could probably do it as well. Like that could be a rule of thumb too. It'll reduce your tax liability. Yeah. Were there any other questions that we got that we need to answer, Evan? Oh, let me switch to this other screen. Okay, if you want a consultation, there's the QR code for that. You can just go ahead and do that. You will be talking with Lauren. She's not on our call today because she's on vacation, but you'll be talking to Lauren. Easy breezy. It's easy breezy. We don't twist anybody's arm to do anything. We just give you information. So go ahead and grab a time on her calendar when she returns. And then we can just talk about which direction you need to go in. It's very simple.
I did have one other question because I know you mentioned something earlier in the presentation about one of your, I think it was the travel concierge person who you helped get like a grant. Would you probably don't know right offhand, but do you guys know anything about grants for speakers?
I don't know offhand, but I would start local with grants, because your city, your county, or your state will probably have some type of grants available for small business owners. That's where I would start first, and see which direction that they send you in, because there's usually something available. I know here, like we typically have some type of like technical assistance grants that the city has to offer small business owners. And I'm sure you said you were in South Carolina or North Carolina? North Carolina. I'm sure there's something in North Carolina as well. So I would start local and then branch out local, county, state. And then, like I've heard of like the Verizon has a grant, Chase has a grant, so there's multiple things out there that you could tap into.
Is there like a specific way to go about looking for these things? Is like, or type of search or something you do?
I will start locally, I would start with your economic development department in your local city. I would start there because they may have an incubator or they may have some type of program that you just don't know about. And I would just reach out from there.
Okay.
I'm sure we have something here in Michigan. It's called One Place. It's like run through the public library, and they serve as they sort of like help small businesses like inform themselves and then get going. And they're a great resource for like what the local grants look like. I would imagine there's probably some like North Carolina specific division of that, like run through the federal government. Like I said, I was just through the library, and it's like they have a ton of useful information, and at the very least, like it's a nice point person for like knowing the totality of what kind of funding is available on the local level. Yeah.
The other place I would recommend is your local SBDC office. They're funded by the SBA. And then SCORE, SCORE. SCORE is an organization where retired professionals give back to the small business community. So you can.
Yeah, I know about them.
Yeah.
I
Yeah,
actually
sometimes
use them and go sit in on their classes.
Yeah, they have classes and resources, but they can connect you to local people who can then give you more information about like what the community has to offer for small businesses.
Now that other abbreviation was SVDC.
SBDC, yes.
Yeah.
And they're
Okay.
funded by the Small Businesses, the Small Business Administration.
Mm-hmm.
They're kind of like SCORE a little bit, but they have a little bit different programming too. Like I taught a QuickBooks class for the SBDC in Michigan. So they have resources like that as well.
I'm sorry, could you say that again? You broke up.
Oh, the SBDC, like I was just saying that I taught a QuickBooks class for the SBDC that was run by the Michigan SBDC local people.
Oh, okay.
Yeah. So here on the screen is our financial roundtable calendar that you can add to your calendar so you never miss another roundtable. We cover topics just like this every single month, and we will be sending you a survey about this one. If you could fill out the survey, that would be great. That just gives us more information about the topics for us to cover in our upcoming sessions. And each session, we talk about something different that's relevant to the small business community and what small business owners are actually going through. So, like at this point, if you guys have any other questions, we can definitely answer them. Otherwise, thank you so much for showing up today. I really appreciate your time. And I appreciate you coming. But next time, bring a friend with you.
Yeah, this was definitely informative.
Awesome.
I appreciate it.
We want to give information. That's what we want to do.
Yes, thank you.
You're
It was
welcome.
very helpful.
All right. Oh, did we have some questions in the chat? Oh, okay. Bye.
All right, bye.
Thanks, guys. Bye.